This is Visual TV News Brief. Here are the highlights for today. Fuel scarcity persists despite assurance from NNPC and DPR. Credit to private sector declines by 160 billion naira. 135 farmers get 35.250 million naira to cultivate 300 hectares of cassava in Edo. Federal government to invest $100 million into long-term financing of agribusiness. Medicine dealers protest closure of drug markets. Lafarge pledges 220 billion naira investment in capacity expansion. Federal government to sanction makers of substandard electricity poles and others. Sun decries influx of substandard foreign products.
Contrary to the assurance given by the Nigerian National Petroleum Corporation (NNPC) and the Department of Petroleum Resources (DPR) of the availability of oil products across the country, fuel supply situation across the country remains tight. This is as fact emerged yesterday that about 30 companies were granted licenses to import around 26 million barrels of gasoline, or around 3.1 million tons, in the first quarter of this year, down slightly from the previous quarter. Investigations show that most petrol stations in Lagos were not dispensing products yesterday, and the few that were selling had long queues of anxious motorists waiting to buy.
Banking sector credit to the private sector declined by 136 billion naira to 16.373 trillion naira at the end of January 2014, compared to the 16.509 trillion naira that it was at the end of December 2013. The latest money and credit statistics for January 2014 from the Central Bank of Nigeria shows that the total amount of currency in circulation also dropped by 189 billion naira to 1.588 trillion naira at the end of January, as against the 1.77 trillion naira it was the preceding month.
135 farmers get 35.250 million naira to cultivate 300 hectares of cassava in Edo. The Bank of Agriculture has created a platform for 135 farmers in 4 communities in Edo North Senatorial District to access the sum of 35.250 million naira. The federal government interventionist agency sponsored the program as part of the federal government's effort to boost cassava production. The program, tagged BOA Cassava Mopping Up Program, is geared towards encouraging farmers to go into cassava production, as well as creating existing markets for the farmers to dispose of their various products.
The federal government, through the Ministry of Agriculture and Rural Development, is set to invest $100 million in long-term financing of agribusiness through the Fund for Agricultural Financing, FAFIN, which is a private equity and passive equity and debt fund, was created by the Federal Ministry of Agriculture and Rural Development in partnership with the German Development Bank and the Federal Ministry of Finance to address issue financing. Speaking at the inauguration of the executive leadership of the Nigerian Agribusiness Group on Monday, the Minister of Agriculture, Akinwumi Adesina, said that the FAFIN Fund will provide qualified agribusiness with $2 to $5 million funding to finance their businesses.
Chairman, Onitsha Patent and Proprietary Medicine Dealers Union, otherwise known as Bridge Head Drug Market, Honorable Ugochukwu Umosu, has asked the Pharmaceutical Society of Nigeria to stop inciting the Minister of Health, Professor Onyebuchi Chukwu, and National Agency for Food and Drug Administration and Control against traders in the market. He alleged that pharmacists were asking for a pound of flesh from the traders, wondering why the pharmacists wanted to take over the sales of drugs from importers after which returns will be made to the owners.
Lafarge pledges 220 billion naira investment in capacity expansion. Lafarge Cement Wapco plc has revealed plans to invest additional 1 billion euros over the next 3 to 5 years on expansion programs across the country. The company said it has already invested 1 billion euros between 2009 and 2012. Lafarge country CEO, Nigeria and Benin Republic, Gulaimo Rocks, disclosed this in Abuja on Wednesday, said this new investment was to enable the company complete the expansion of its plant in Calabar as well as the Ashaka cement in the north. Speaking during an interactive session with journalists in Abuja, Rocks said that the company has started the expansion of the Calabar plant as well as expansion of its project in Ashaka in the north.
Yesterday, the federal government began the process of easing out substandard products used by operators in the Nigerian electricity supply industry, starting with concrete electricity pole. The federal government, through the Electricity Management Service Limited, one of the successor companies that emerged from the unbundling of the defunct Power Holding Company of Nigeria, kick-started routine nationwide inspection of activities of companies that manufacture concrete electric poles in its bid to ensure total compliance to standards in their operations.
The Standard Organization of Nigeria, SON, has decried the influx of substandard foreign products into the country, stating that it was slowly killing the nation's economy. Director General, Standard Organization of Nigeria, Dr. Joseph Dumodu, at a 2-day Northwest Zonal Sensitization Seminar on zero tolerance for substandard products held at the Jingiya Hotel, Sokoto, lamented the increasing number of substandard foreign products in the country. According to him, the menace of such substandard products from abroad had led to the collapse of many industries, especially in the Northwest.